Okay, uh, this is not the official broadcast, which will start in 3 minutes. As you know, I always arrive early to make sure I'm at the right channel. And I think I'm at the right channel because people are speaking English. By the way, before we start, the central bank surprised all of us again by 100 basis points rate cut, which led to further depreciation of the Turkish lira, which brings up the question of whether these people will ever learn or whether, as Einstein was posed, there is any limit to stupidity. In my view, no, at least in some countries. But today we're going to talk about deeper matters, about the great oil shock and how it's going to affect Turkey. And I'm going to talk about a variety of factors, not only economics, but human migration, as well as real estate. So it's not the simple, well, if oil prices fall, Turkish current account deficits will decline story. You're going to get your money's worth, which you're not paying. So you're going to get something out of this positive. Okay, in 2 minutes, we're starting. We are going to take questions at some point, but we're trying to figure out a methodology that would exclude trolls and allow me to pick real questions. Okay. As you know, oil prices have declined to 21st century lows, and in futures contracts, they even turn negative, which means people are paying you not to sell them there, not to send their oil to them. This, of course, attests to the depth of the demand shock, as well as how difficult it is to stop production in commodities like oil once you start. And I'm going to start with the question of whether this oil shock is going to end anytime soon. Okay, we're starting in roughly 50 seconds, but I'm not going to count down. No, I don't accept philosophical questions. I don't know why we're here or how long we're going to stay on this planet. All I know is that humanity is a virus worse than COVID-19, and nature will benefit greatly if we were exterminated by a human flesh-eating alien race. Okay, guys, it's 3 p.m. Istanbul time. You're at Real Turkey channel, which has become your second home, and I'm your host, Atilla Yesilada. Today, we're going to talk about the great oil shock. It's really devastating to many countries and markets, and how it's going to affect Turkish economy. I'm going to start with the global environment and how long this oil shock is going to last, because if it's a short-lived panic attack, if oil prices are going to increase to normal levels within a couple of weeks, it's not worth talking about. But if this is going to be almost a permanent or a medium-term situation, then obviously there is going to be lasting effects on Turkish economy, and it's worth discussing. And then I'm going to move on to the known effects of lower oil prices on Turkish economic parameters, such as current account deficits, inflation, etc., etc. And then I'm going to go to more eclectic areas such as migration. Okay, I'm not going to give you a lot of theory, but in my view, oil prices are going to stay extraordinarily low throughout 2020. The reason for that is I don't believe in IMF's good case scenario of the COVID-19 pandemic being brought under control in the first half of the year and the world economy staging a recovery in the second half of the year. Their bad case scenario entails a prolonged pandemic, by which I understand, we're going to deal with this virus throughout 2020, and massive output losses through 2020 and 2021. To me, at this point, this looks like the more likely scenario. One may argue that in several European countries, and perhaps even in the United States, the epidemic has peaked and is starting to decline. Fine, I have no argument with that. But the world is bigger than these countries. You look at Russia, you look at Latin America, you look at the entire African continent, and the virus is still spreading very fast. They are in the pre-takeoff stage. And given the underfunded and creaky health systems, they're really in a bad situation. And, we live in a global world. I mean, you can't have parts of it open and the rest closed, because people from the closed areas will migrate to open areas. In any case, so throughout 2020, I anticipate very low oil demand. I mean, in any case, IMF expects the US GDP to decline something like 5%, I believe. The Reuters poll for China GDP growth is 2.6%, which by itself tells you we're not going to get much oil demand. And International Energy Agency has officially pronounced that the production cuts by OPEC Plus are not insufficient to close the supply-demand gap. So this is a permanent situation until there is a significant demand recovery. This is why I chose to talk about the oil shock and its impact on the Turkish economy. The first effect is well known. We import most of our energy. It's not as bad as it used to be a few years ago, because Turkey has invested a lot into renewables and has restarted its coal industry. I think now we need much less natural gas, for instance, in terms of electricity production, and our cars are more efficient, though volume growth may make up for that. But nevertheless, I think the old rule of thumb that every $10 decrease in the price of Brent per barrel brings about a $3 to $3.5 billion improvement in Turkey's current account stands. So oil declined something like $30 from the peak. And if this continues for a year, we're going to save, about $10-11 billion. But now, mind you, these rules are too simplistic. They are usually derived from an era when Turkish economy is growing 3-4%. If an economy is growing very little, it's using much less oil and natural gas, so the savings are less by definition. So I'm not denying the fact that lower oil prices are extremely good for the Turkish economy, not only for the current account deficit, but also because, assuming the government will reflect these price decreases to the pump or to our heat bills, it's good for inflation. And this is why central bank probably cut interest rates another 100 basis points today. But the impact is not as pronounced on an economy that's in recession vis-a-vis an economy that's growing by 4%. Another point is, part of our energy bill is, of course, natural gas purchased largely from, Russia and Iran and Azerbaijan. Azerbaijan is pretty flexible on pricing, I understand, though I can't make any guarantees. But Russia and Iran have this use or pay contracts, I believe that's what they called. And if we don't use the natural gas, we pay for them anyhow. And these contracts are almost fixed price contracts. So, unless oil price declines for a year or two, the natural gas prices we pay to Russia and Iran are not going to decline, which reduces savings. But nevertheless, since the Turkish economy is very inefficient in terms of energy consumption, there's another effect here. It increases our efficiency. It makes us more cost competitive vis-a-vis other economies who are competing in the export market. So these are the positives. But there are also negatives. One is tourism, obviously. I mean, Russia last year sent 4.5 million tourists to Turkey. This year, authorities anticipated something like 6 million, which in my view was a fair estimate. But now, as of yesterday, Russia reported 50,000 corona cases, and they are rapidly burning through their FX reserves because oil prices are extremely low. How many tourists will they be able to send? If the corona outbreak continues, will we accept any tourists? So, to me, most of the Russian tourism business this year is dead. The second destination for tourists to Turkey is Arab countries, and they too are in a bad shape, though not as bad as Russia because their cost of production is usually lower and they have more reserves, even though Russia is rich too. But nevertheless, I anticipate much fewer tourists from Arab countries as well. I think I mentioned this before. Last year, Turkey netted $26 billion from tourism, roughly as much as the savings we would generate from lower oil prices this year. So if we lose the tourism season, we are not going to we're not going to have any net impact on our foreign trade accounts. Uh, there are other problems here as well. One of them is how financial markets treat these shocks. If you went to college to study financial theory, it will tell you, look, Turkey is an oil importer, so a net gainer from this situation. It should be treated more favorably by international investors, which means the Turkish asset should perform better than the assets of oil importing nations, or on average, better than the EM indices. Usually the theory is correct. I'm not going to argue with the theory. But we live in an era of deep panic, fear, paranoia. And at times like this, the cross asset correlations are extremely high, to use a technical word, to show you that I went to school somewhere, though I don't remember. I was drunk. Which means in a panic environment, people don't care about good assets, good credits, bad credits, everything is sold. And that is probably going to be the case when it comes to Turkish assets. In the equity market, there are some long-term investors, such as pension funds, which pick stocks, bottom-up investors, and they may find those stocks that will benefit from very low oil prices. I believe Tüpraş might be one of them, though I'm certainly not recommending this stock. Turkish Airlines, Pegasus Airlines, certainly. Anybody who does petrochemicals business. But most of the investors today are macro investors, and they are sort of like basket investors. They look at a group of countries and they buy and sell them together as commodities. So the danger exists that, to the extent this great oil shock creates a sell-off in emerging markets, Turkey will not be distinguished as good credit and will also be among the losers. I can extend on this analogy because it is important. Already before this oil shock, the bond spreads, that is the interest rate an average borrower pays on top of the American Treasury rates of equivalent maturity, were widening. That's called a credit crunch. And that is because most corporations or most nations are going to generate less cash flow, less tax revenues, but their expenditures will increase. And investors were becoming very choosy. They were assigning higher interest to riskier corporate bonds and government bonds. I'm sorry. Fed injected a lot of money into the corporate bond markets, even, you know, into very short-term bonds and junk bonds, which was great. It unlocked these markets, but now there is nothing one can do to avoid widespread bankruptcies in energy and upstream industries. And I'm afraid that this perception is going to drive up the spreads on all low credit rated countries. And Turkey is rated 2 or 3 notches below investment grade. So this is not going to be very good for our borrowing opportunities. And given the fact that we have to roll over $170 billion of private debt per year, any widening of spreads is very hurtful because that's reflected to loan costs at home. So if this sell-off in the markets that started 2 days ago continues, then I would be worried about Turkish assets, including the Turkish lira. And as I've said, we're already very close to a currency shock. And this oil shock, even though it sounds counterintuitive, may hasten a currency shock in Turkey. There are other factors to consider as well. One of them is the fact that neither Iran nor Iraq have effectively brought the COVID-19 crises under control. And now with oil trading almost at $0 per barrel, their ability to do so would be further diminished. I mean, you need money for your health system to deal with this crisis. Everyone knows that. Even England can't find enough masks and surgical gowns, etc., etc. And of course, Iran and Iraq are relatively poor countries, and if they don't have any oil revenue, they don't have much, foreign exchange to buy the medical equipment and medicines they need from abroad. Iran is already suffering from American sanctions as well. So I'm quite mindful of a scenario where the COVID outbreaks in Iran and Iraq would have a second peak. And why is that important for Turkey? Because, people will migrate to Turkey. There is nothing you can do to stop them. If you look at the geography, if you look at a geographical map of Turkey, Iran, and Iraq, you would see that the border is extremely mountainous with thousands of smugglers' paths that no army can control, and there is huge amount of legal and illegal human interaction between the three countries. And, people in Iran and Iraq who have the tenacity or the physical stamina wishing to escape from the outbreak will flee to Turkey, and they will bring the virus with them, sometimes without knowing that they have the disease. There are two more areas that I need to cover very briefly. First, Arabs were number one buyers of foreign buyers of Turkish real estate. Foreigners buy roughly $5 billion worth of Turkish real estate. I don't know the exact, division of that among countries, but I would say roughly 80% comes from Arab countries, including Iran and Iraq. So Middle Eastern countries, I'm sorry, that's a much better word. Iranians obviously are not Arabs. This year, how much will that go down? I don't know. Will they have any interest in buying Turkish real estate? But let's say 50%. We might lose $2.5 billion. Already, Turkish construction industry is in deep trouble. It has huge amount of loans which it can't repay, and an unsold housing stock of probably 1 million units. Finally, it is never shown in Turkey's accounts, but Turkey's contracting and construction companies are very well known in neighboring countries. They have good engineering skills. They deliver the projects on time, and they are much cheaper than South Koreans or Europeans. So they had a huge backlog in Arab countries not in Iran. I think their involvement in Iran is small, but Iraq had money, and in Central Asian countries. I would tend to believe that to the extent oil revenues decline throughout the year, most of the Middle Eastern countries would trim their fixed investment budgets, their infrastructure budgets. And these Turkish companies will either have difficulties in earning revenue, or they will have arrears and they'll have to lay off employees, and they will record less revenue, or they will repatriate less revenue to Turkey. So at the end, it's difficult to say uh, whether Turkey is a winner or loser, but clearly to say that Turkey is going to win from this oil shock is an exaggeration. There are many other factors involved here, which tells me that there's a certain amount of damage that we're going to suffer. And the fact that oil price has declined is really no reason for joy for Turkey. Thank you very much for watching another broadcast of Real Turkey channel presented by Atilla Yesilada. And I would appreciate if you could subscribe or video if you like the content with anyone who might be interested in Turkey. Until next time, stay home, stay well. Bye bye.